David, welcome. Happy Friday. This week, the TNX to 4.25, weighing on sentiment and, well, crude demand expectations for that matter.
Yeah, good morning, Ben. Great to be here. Thanks for having me here. You know, so much is going on in crude oil and in natural gas. There's so many factors at play fundamentally that people really should, if they don't know the technical side of the market, should take a look at it because it can be much clearer than what a lot of this news and in some cases noise plays out in the market. One of our outlooks for crude oil right now is that in the month of November, coming up very soon here, we do expect crude to continue to trade at $84 to $83. There's going to be some centering at that price level. And as we get a little further into November, we're going to be able to say a little more about what we think crude is going to do from this point forward. I can tell you a couple of things that we're looking at, or your listeners, a few things that we're looking at. Number one is that for the year, looking at a longer term outlook, for the year, a yearly close at the end of 2022 above $77 is going to be a stronger position for crude, and we will tend to be looking for higher prices from there. If we close below $77 in 2022, that for us is a much weaker position and probably indicates a decline to the $58 level. If you think back, $58 was quite a long time ago since we've seen that number, and that would change quite a bit of the outlook of crude oil to be down back in the 50s.
Let's get back into the fundamentals here real quick. I do want to talk technicals. I know that that's your primary focus here, but in terms of when you're talking about bearish indicators, sometimes I look at price activity. And again, recently we had, not only the IEA, the EIA, World Bank revising some of the growth forecasts, demand forecasts lower ultimately. We've had a lot of hawkish tone from the Fed. We've got rates on the rise. I mean, all this bearish activity, you think that prices, I oftentimes wonder where would they be without it? So to your point, it looks like the 77 level headed into the year, end of the year is going to be very pivotal.
It really is. And some of the things like the 180,000 or 180 million barrels of oil, the strategic control. Yeah, the SPRs. That's another whole piece of this, which to me, if you went to a shopping mall and gave every person in that mall 10 cents, you could end up giving out an awful lot of money, but it would make absolutely no difference to the total income to the mall. And so this is very much like what this SPR thing is. It seems like it's not going to have any impact at all. And as a matter of fact, I think it's really just a show for an attempt being made, because I think the United States, I'm not quoting me on this, but I think the United States uses about 20 million barrels of oil a day. So that 180 million, which was not released all at once, it was released since, I believe, March or April of this year through now. And so it really, that's 9 days worth of action in the United States. It just isn't enough. And unfortunately, until some fundamental things change about how the United States treats the existing oil companies and so on, we're going to be in this position where we have to go to extraordinary lengths, go to other countries and so on to try to get our energy needs met, which just doesn't seem like a great idea to me, not to be political.
Yeah, I want to kind of extend that thought a little bit. I love the analogy there, or the description of sort of what's playing out with the SPRs, because as I think about that, to your mention, it doesn't help sales of the mall, right? Nobody can go in and spend a dime in any one of those stores, ultimately.
That's right.
They're not going to get together to purchase something together, ultimately, because how can they split it up as they walk out the door? And it's not going to help any of the individual consumers in the mall, right? 10 cents, where does that get you, to your point? But what it will do is deplete the gumball machine quite a bit, right? Because the people are going to be pumping those dimes in and trying to get those gumballs out of there. It'll be empty at some point, and so will those SPRs if this keeps up. But this also sort of seems like you were saying, put OPEC kind of back in the driver's seat here.
I hope so, in some ways. In the run-up to the election, this administration sort of promised a war against oil, a war in the energy markets. And we have found out in the past, you really can't force a major change like this. Yes, we have solar. Yes, we have nuclear. Yes, we have wind. But you can't force it. It has to happen at its own time. And if you do try to force it, usually you get egg on your face.